Good morning, Paul Georgie from Allendale. It's December 30th, Monday morning, and we've had relatively quiet trade overnight. However, grain markets are lower as Asian markets and European markets were helping weigh on the U.S. Chicago Board of Trade markets here in the overnight session. Weather in South America, probably the biggest key in the weakness. Argentina got some needed rain over the weekend, southern Brazil as well, and the heat, the high heat temperatures are expected to be a lot narrower time frame and more rain following in those areas here later in the week. So that has put some pressure and gave traders a reason to sell, even though it is a light volume trade in the holiday market. The export sales on Friday were very good for corn. We had good ethanol production numbers also on Friday, so the cheaper prices are creating some interest and dragging some of our customers that have went elsewhere earlier in the year back to the U.S. for some purchases. We also are hearing that water levels on the Mississippi, because of the cold temperatures and the drier conditions, water levels at St. Louis are getting to be low again for this time of year, and that is causing some problems for barges moving up and down the Mississippi. So creating some less demand or higher costs to get that corn to the Gulf. We also have got First Notice Day tomorrow, so anybody that has a long position in the January contracts at the Board of Trade will be at risk of delivery going into that time frame. So make sure you talk to your broker about those positions so you don't get delivered on if you don't want to. Markets will be closing at regular time on Tuesday. Tomorrow we'll be off on Wednesday, and then reopening at 8:30 on Thursday morning in the grains, 9:05 in the livestock markets. The big news on Friday afternoon was the hogs and pigs report. USDA said that we've got 99.3% of a year ago hogs, all hogs kept for breeding 98.9 and marketed at 99.4, which tells us a couple things. One is we were expecting to see some buildup in breeding herd, that hog producers were expanding. We did not see that, with only 98% or 99% kept for breeding. The other key takeaway from the report is the pigs per litter. They were in line and actually showed an increase. So the USDA did not make any adjustments for this PED virus, which has been talked about for the last 3 months and has had a big impact on futures prices. So we'll see how traders react to that this morning. Right now, we would have to call the market higher, anywhere from 40 to 60 higher at least, maybe 75 higher in the pork complex. The weight that will be still bearing on this market is the demand for product. Cutout value was down $3.48 on Friday. We've got a short work week this week again. Hog weights are heavy. We still have got to deal with those realities in the near term until we get through this first few weeks of January. So we'll be monitoring that very closely. The cattle market had a good Friday's close. Cash markets were very strong. Packers needed cattle to fill out this week's slaughter levels and then build numbers for next week, and realizing that supplies are tight, the Packers paid anywhere from $4 to $5 higher last Friday to get cattle. They've paid up as much as $1.34 to $1.35, which would be a record high price for fed cattle for the year. Cutout values were up slightly. Choice up 6 cents. Select up 84 cents. And we expect that we should see a steady, firm opening in the cattle market as well. So there is going to expect to see some very choppy trade and lighter volume trade as we go into the holiday again here in the middle of the week. That creates a little more excitement when anybody comes in with some sizable positions. It can move the market rather quickly. So stay in touch with Allendale. We'll keep you informed. You can give us a call at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.